called my bank and I said, hey, if I want to pick $5,000 up today, can I? They said, she stumbled around a little bit. She said, sure. I said, what if I want $10,000? She said she would have to order it from the Fed. You have to order my money?
Cryptoslo, cryptocurrency news and investing.
Cryptoslo with more crypto gains. What's going on, guys? Hopefully you are staying safe and healthy in this crisis. I've recently been not quarantined, but my business day job has shut down the office and we are all working remotely. And let me tell you, it's pretty crazy. It's pretty crazy. You know, a lot of things. You know, how do you stay healthy in all this? You know, how do you keep your mental clarity straight? And then on top of it, you have all this financial stuff going on. It's pretty crazy. Which brings us to the topic of today's video, and that is my prediction for the Dow Jones Industrial Average. So we peaked out around 29,000 and we are sitting around 20,000 right now. There's been really no sideways movement on this. It's been bouncing around, and I'm just going to basically talk about where I think the Dow is headed. If you listen to my videos like 2 weeks ago, how to protect yourself during these type of times, I said that I was personally moving a lot of my money into money markets, and I am glad I did. I did that at 29,000, and I am sitting on the sidelines waiting like a cat of when to pounce back in. I'll get a little into that later in the video, but let's talk about this Dow. So as you can see with this Dow, it literally has had a 10-year, yes, 10-year bull run. You know, this is that '08. I mean, the '08 looked like a tiny crash, but what you can see is in '08 we dropped from 14 down to about 6. So we lost about 8,000 points. And we're already at 10,000 points, and you're like, what is going on? You know, we have not even seen the socioeconomic effects of this yet. This is all just in everyone's panic selling, and there's all this deleveraging going on, and a lot of people don't understand that. And that's basically they're getting out of these virtual asset stocks and trying to cling on to hard assets like gold, silver, Bitcoin, cryptos, and anything else. You know, or they're sitting in cash waiting for the bottom so that they can make exponential gains. Don't be fooled. There are people making a lot of money with all of this going on as they're shorting the market. So what do I think? Where do I think we're going to go in 2020 from here? Well, I can tell you. Let me tell you the story of what happened the other day. So I called my bank, and you know, all this stuff has you thinking about bank runs and such. I called my bank and I said, hey, if I want to pick $5,000 up today, can I? They said, she stumbled around a little bit. She said, sure. I said, what if I want $10,000? She said she would have to order it from the Fed. You have to order my money? And I said, how long will that take? And she said, a week. And I was just like, wow. Not saying that there's going to be a run on the banks, but I'm saying that there is no money in the bank. It is all digital credits in a centralized system that, you know, who knows if it can collapse. Because here's the thing, the run on the bank now would be a lot different because everything's electronic. As people flood to get assets, then you would have the, you know, they could possibly limit withdrawals. There's all kinds of things. So, you know, I'll get a little into that at the end of the video. But with that being said, what do we have going on in the markets? Well, we have the deleveraging. We have the government saying they're going to send checks to everyone. We have the unemployment flooding at astronomical numbers to the lines to collect checks. and all the people that lost their jobs in the restaurant industries, the lawsuits. I mean, we're talking, people can't really even fathom the amount of money. I mean, the budget package was $1 trillion, and literally that trillion will probably be spent in a week or two. So, with that being said, do I think we'll go to the next resistance level, which is 15.9? And with that, I would say not only is it possible, I would say it's very probable that we are headed into this 15, 16K region. Now, here's the bad news. The bad news is you can see that this is not really fantastic super spike volume. As you can see the FOMO here with the volume, right? And you can see the volume is pretty much normal. This is when everyone's supersized into leveraging, and we have all those margin calls, with this deleveraging. So a pump, 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 and then wham. So with that, I would say there's just not enough volume at that level, at that support, to hold support. So now what? Well, that takes us down to here. And once again, that's the 10,800. Now this is looking more probable than the stop at this. This was very probable, I think, in my opinion. This is definitely, I would say this is probably like 70-80%, and I'm going to say this area, that 10.9 range, is probably in the 40 or 50%. And then we have the full retracement to the mean with the massive volume spike and that really strong candle, and that puts us in this 6,000 to 8,000 range. So what is my call for 2020? My call is 8 to 10,000. That is where I think the Dow is headed. Like I said, I've protected my 401k, assuming the money markets don't collapse. But if that happens, everyone's screwed, if you know what I'm saying. So I'm calling 8 to 10,000. Now, what can you do? Now, as always with trading, it's hard to find the bottom, right? It's very hard to find the bottom. So I would probably move 20% of my stable funds into the market in this 15 to 16,000 range, and then I would incrementally add another 10 to 15% if it keeps going down. And that's kind of my strategy for maximizing my retirement account. Like I said, you can never really find the bottom, but this range is looking highly probable. And it's just, the reality is these huge candles, this is just all leverage. It's all leverage. And what you have to understand about leverage is the money doesn't really exist. So what happens with leverage is you can basically just delete this, because this leverage will collapse to the point of right before the leverage began to happen, which puts us, like I said, in that's a little higher, about 16 to 18,000 range. But like I said, when you have leverage, it's really not your money, and the indices will most likely collapse to that point of when the leverage started as a starting point. And I'm not giving you financial advice. I'm not telling you what to do. But as Elisa Rustani says, you have to have some risk controls in place, and to do the best you can with what you have. And Dow 20,000, you're down 30%. So assuming you have a decently balanced fund. But I'm not going to go out and buy bricks of gold or anything tomorrow. I still think the stock market is valid. It's just the reality that we're going to see so many businesses fail in the next upcoming months, with the cash flow being set off. The travel industry, the the restaurant industry, and I just don't think they can print that much money. And then they're going to send checks out to everyone. I mean, the Fed has gone crazy. And really, you know, if you think about this, in some ways, when we emerge from this, we will be stronger. You know, we will be back to maybe we should make some stuff in America. You know, maybe we shouldn't be so dependent on other countries for manufacturing processes and stuff. So, you know, what I'd like to see with the government is, you know, I would love to see them give, instead of just spending and printing money, give tax incentives to companies that want to stay in America and make America strong. You know, that's huge. Give a tax incentive for Apple to bring back a couple $100 billion back into this country, and you know, be able to do it without paying taxes. You know, they have to use their head with this, because it really is a catastrophic situation. And just printing money is definitely not the way to get out of this. You have to have consolidation, deleveraging, and more efficient businesses come at the head of this. So, in other news, Bitcoin is having a nice little pump. If we look, let's see what ETH is doing. ETH is not too bad, 132. So, what is my Bitcoin thoughts for the day? Well, my Bitcoin thoughts for the day are, we really need to break this 6K, and you can see this really hard candle right here, right? And if we don't break above this, we're going to have some problems. But hopefully we can close above 6,000. As you can see, we had a 1334 crossover, which is fantastic. Looking at the MACD, it's building all this energy. If we zoom out a little farther, you can see we're still fighting to get to that 13 on the 3-month, which is okay, you know, because this graph adjusts as this moves along. But yeah, we gotta hope that we don't see the rejection at the 6K, and you know, we can get over that hump. So that is today's news. As always, like, subscribe, smash that that like button. You know, all of you guys, I really appreciate you sticking with me through these hard times as we continue to hodl our coins and try to promote cryptocurrency mass adoption. As always, this is Cryptoslo. If you're not talking gains, then we're not talking.